Oh god. Okay, so hold on 1 second. I need to get this shit set up for YouTube, and I am retarded, so it'll probably take a second. Let's see here. I want to do these. There we go. Okay. Alright, so basically what I'm doing here is I'm taking all the data that we get from the Discord and basically putting it all in a spreadsheet. And this is for the month of August. This is basically for the last 6 days or so since we saw the trend basically happen. Well, I guess not that long. It's basically since the this recent trend started, the last few days or so. It's basically 864 queries of every ticker in the market. We're gonna see what the fuck is going on with it by visualizing it in Excel. And the way to do it is you basically just go and grab it from the Discord channels, and you can actually export it too. There's a program called Discord Chat Exporter that you can get, and then you can literally just go in and batch download all of them by industry, and then just put it in Excel. And once you have it in Excel, you just have to make sure that all of the data is constant, and then there's a trick you can do to organize it basically. And the way to do that, which was a pain in the ass till I figured out what the problem was, there was like one thing in here that was fucking it all up. But basically, once you have all the data sorted, and this is all in one column, mind you, it's all just, sitting in one column, you can go ahead and extract that by putting, 2 letters and then the column that it's in and then the cell block. And then once you get it all in there, you just replace it with an equal sign, and it basically pulls the data out like this to where I can work with it now. So just give me a second here. I'm going to make sure it's all the same thing, which it should be. That's just extra shit at the bottom. Alright, perfect. It's all good. So now I can actually look at this shit. And this is how we were able to tell what the consumer cyclical was last time. It was 'cause we did this shit, or I did this shit, looked at it, and it was obvious that consumer cyclical was going to be the focus. Like, your Walmarts, Home Depots, Target, all that shit. That's exactly what we saw. So now we can organize this further. I'm going to insert this here, and we're going to do ticker, sentiment, and then this column here I'm going to have to work with for a second, because it's got a few different things in it that we need to extract out of there. So then here I'm just going to go and do data, text to columns. Yeah, I'm making sure I'm good there. And then I'm going to do a delimiter by a colon. And then that should fix it up. Oh, you know what? Actually, I need to copy this, paste it over itself, and turn it to values, because it wasn't even registering anything. Okay, so move this over by a colon, and then that's how I get all this shit not stacked together. So I'm going to delete this, don't need it, because I can put the strike up here, strike price there, and then remove the contract type, so we don't need that. Then we just are left with the strike price. And then call or put call. And you can do this with anything. You can do this with unusual options, golden sweeps, or dark pools. Like the way we have the Discord organized, it allows for it, whichever way you want to do it. We don't need expiration date. It's a little bit of work, but it's worth it in my opinion. And there's probably a better way, but I'm retarded, so. Expiration date, basically it's like carrying over the next value to the next column, so you always have to remove what the next one is. So the next one's volume, and then the last one's going to be open interest. Open interest, replace that with nothing. Okay, so now we're left with a data table for 804 unusual option transactions that took place, with the sentiment, the strike price, whether it's a put or a call, their expiration date, the volume, and the open interest. What we want to see is the overall picture and see if the Excel can find any trends for us, which it usually does. And this is everything that would have came through the Discord. So it's not specific to S&P 500. It's everything. So let's see what it finds. We're analyzing the data. It's still analyzing because quite a bit. It's actually not too bad. It's only 800. Like the in total, like if I wanted to do like however long we've had the Discord feeds running, it would be like I think we're at over 140,000 or something like that. It even puts the fucking picture on there. I love it, and the colors. It's cheating, bro. It's really cheating. So obviously, Best or BBBY has noticeably higher volume. Yeah, no shit. This is likely the case because it's showing that August 19th and September 16th, those two expiration dates specifically, had way more volume so far for these unusual options. And the reason why is because right now, the 19th and the 16th, that's like literally the two expirations before the FOMC meeting, and likely when they're going to try some shit. And next week's going to be pretty critical as far as overall direction. But yeah, I mean, it's pretty simple. Your long positions that you're holding for December, just don't touch them. Wait for the market to stop, and you'll know when it stops because you'll be selling your puts that you have against your Coinbase. Like if you buy one Coinbase call for December, and then it goes down 60% and you only have one, it's super easy to average down. And then if you were even smarter and had puts against it, you would have made a revenue on the way down, and now you can average down with house money, and you kept your capital preserved. That's what it's all about. But let's see if we can find anything else real quick. There's likely a lot, and you can manipulate the data however you want, as far as sorting and things like that. Put accounts for the majority of strike price because they're likely selling them. Because what do we know about RHO? The RHOs negatively affect puts, which mean they're going to sell them. And if they are pricing in the RHO for the call side, then this is, I guess is kind of what you would expect to see. But really, I mean, if you were somebody that's selling options, like you're selling puts, right, to gain that premium, if the RHO negatively impacts premium, that would be a good idea to sell it because you're making free money. And then on the other side, if calls benefit from RHO going up, from the interest rate hikes going up, then obviously the longer dated calls you have, the more benefit you're going to get. And that's kind of what we've been seeing as far as unusual options. Hopefully it'll bring back an expiration date. And the 16th of September is, the key focus because it's before the next FOMC meeting. This is what I want to see right here. Like, look, for sentiment bearish, SPX has noticeably higher open interest. And what do we know about open interest when it comes to options? Support. SPX has the most, followed by SPY, Tesla, HYG, SQ, INTC. And I'll link the spreadsheet. I'll link it in both chats so that if anyone outside the group wants to use it, they can. I'll go ahead and do that now. Because, anyone can join me and look at this shit with me in real time. It's crazy. Technology. I'll name it Unusual Options Entire Market mid-April. I think it's the 11th through the 19th. I believe. This is the difference. Reading shit online and looking at shit like this is like night and day difference of planning and strategizing on how to trade or where the opportunity is. It's almost too easy. You just have to learn, the front work on how to do it. But there's so much things you do. Like you literally have a list right here of all the unusual options that came through, and you can order it however you want, like by open interest, by volume, by expiration date, however you want. Whether it's a put or call, you name it. So I'm going to go ahead and drop this here in, where the fuck is the chat? Okay, there we go. There we go. There's that one. And I'll throw it to the 7 people that are probably watching on YouTube. There we go. And yeah, let's keep looking at this shit. And sorry, YouTube, I do not chat on YouTube because half of them are, you know, it's just, it makes you want to stab yourself when you read some of those comments there. But yeah, let's keep looking at this real quick. And my kids are awake right now, and that's why my sound's off for Discord. Sorry about that. I will be on like all next week doing this shit, so let's look at this some more. Yeah, puts, open interest, bearish, open interest. Put accounts for the majority of volume also, because again, selling puts. And then look, on the opposite end, on the fucking opposite end, what do you see? VIX and BBBY have the other end of the spectrum with the call side open interest, which is selling calls. I mean, that's what I'm saying. It's almost too easy. Let's see where the sectors are, though. Oh, you know what? I didn't pull it from the Discord. See, this is why the Discord is a benefit, our Discord, because if you don't have it organized by sector and industry, you don't get it in the data. And I think that's how I actually saw the sector, you know, last time. Shit, that sucks. Well, I guess I'll have to pull it that way, because again, yeah, pulling it from the Discord is way better because you get the expiration, or you get the different sectors and industries. And here's one. So every now and then you'll get like an anomaly like this, like for expiration date September 2nd. NTNX has noticeably higher volume, so then we can go to Weeballs and pull the chart up and see what the fuck's going on, and you know what I mean, see if there's anything there. What was it? NTNX. It literally just touched gap resistance as it, and look, like that. What I mean by RSI and chart, by the way, while I have some people here, is if you look, and of course my snip and sketch shit isn't going to work, god damn it. If you look at, I really need that tool though. I need to restart my computer, I think. I shouldn't have to do this, there's a shortcut for it. But if we take this and you look at the RSIs, and I have 3, I know, just pay attention to the blue one. Look, when the RSI hits overbought, it hits the gap perfectly, right? That's shit's what I've been saying this whole time. That's not a coincidence. This happens almost every fucking time. I mean, this is almost like a guaranteed put play right here. This is like Core Logic 101, like back in the day. Like whenever it hits this gap, this is what we used to exploit right here. Like gap down, it would run up, try to correct. This looks like Kirk almost. But yeah, man, I mean, when it hits that gap right there, and there's no like corridor above it, 9 times out of 10, it's gonna come on down. But yeah, that's what I've been saying. Like, if you look at just this blue one right here, and this candle here, it's like they go hand in hand. Because I mean, the RSI technically doesn't give 2 fucks about gaps, but if you go and you measure it, it's the same thing. The gap is where the overbought is. This is the fucking daily. I mean, that's what you're looking for right there. That's how you know you're probably ready for puts right here, because that's a large gap for not your big name stock. It's Nutanix. Let's look at the options. Where's the option? Is there a smile? Nope, it's on the put side. Slightly. At $18 for this expiration. Let's see what it said the second, right? The second has noticeably higher volume. Let's see why. Okay, you got it. I mean, it's right at the money, how it should be. Where's the volume at, though? Oh, shit. There's the open interest right there. Right there. I'm thinking that's your put signal right there, man. Support here, support there. It's going to land somewhere in between here. So if that volume that it picked up, because this got picked up, I could probably find out when this alert came in. September 2. IWM, XRT, BBBY. Let's look for I'm surely there's not a lot of those NTXT or whatever the fuck it's called feeds that came in. NT and X. Oh, they just wrote these? Oh shit, dude. Yeah, okay, they just wrote these, man. Like on the 18th. And they already drained them from 40 to 15 cents. Holy shit, this might be a good one to play. Wow. See what I mean? That's this thing, you know. Like Excel's like, here you go. Look at this shit. This is weird looking. Okay. Got it. Okay, hold on. NTNX. It's like nut next. Dude, there it is right there. 16. Look, yeah, okay, 16,000 volume. That shit converted to OI because we can see it right here. Look, 16 OI. That's fucking awesome. So we know now. And what strike was it for? That's what's going to be important. Was it? Please tell me it was a 13. Where's the strike? Do we even get a strike? It was the bid too. That's the 16th though. Okay, it's right here. Oh yeah, it was the 1350. Fucking nice, dude. That's what you want to see. So that means we don't know when these came in. That's perfect. Holy shit, this might be a good one, bro. I mean, these are sitting at some cheap ass prices. I know there's no smile there for all the smile chasers in the group, but you know, there's other strategies that exist, and I think this one's a damn good one here. Look, the 16.5 went up, right? It went up from 50 to 75, but the 13.5 went down. Oh god, dude, that's amazing. And they're 3-day-old contracts, bro. When did this come in? It came in on the 18th. Holy fuck! I think when they wrote these motherfuckers. So when they wrote them, how much volume did they get? 16. That was them writing them. Holy shit. So okay, hold on a second. They wrote these on the 18th. We know that the volume was from them writing it, and it converted over to open interest. That's amazing, bro. I don't think I've ever caught that before. The high was 20. The open was the open was 20 cents. The high was 40, and then they fucking drained those hoes down to 15 cents. And then you look at the ones a few strikes above at 16.5, and yeah, it's a different story, but still 2 days old. So what's the plan here? Let's look at the call side. There's no crazy OI on the call side. Oh my god. That one gapped up 1, 2, 3, 4 days. But that's what I'm saying. You can literally take our Discord data and that's coming through, put it in a spreadsheet, analyze it, and then literally match it up with what you're seeing in the charts and in the brokerages. That is why trading today is different than. That's why you don't need anybody on YouTube, any fucking guy who thinks he's a guru, because he's fucking not. Because he's not doing this shit. He's just trading his complacent strategies, doing Tesla, doing the same old boring shit over and over again. Like, do something different. The data's there for you to do it. I mean, I'm retarded. I can do this shit. And this motherfucker will probably print. I don't like how high the IV is, but I mean, I guess it's not too bad. I need to look at the historical IV, but yeah, man. I mean, that's badass. You can literally connect that shit together. And what I'm saying about those moving averages is whenever you see these two lines go above the other two, and the red and the green are the higher moving averages, the orange and the yellow are the lower time frames. This is your bear zone here. Like whenever the bears or these lines are on top, you're in a downtrend. Whenever the orange and yellow are on top, you're in an uptrend. See what I mean? Whenever they're kind of converging, you're going sideways. The longer they converge, the longer you're going to go sideways. But whenever there's one on top of the other, it's your trend, and it works on any fucking time frame. Any fucking time frame. You want the orange and the yellow on top. That's your uptrend. As soon as they're not, it's a downtrend. Like right there. It's literally all it is, and this works on any time frame throughout history for any ticker. And anytime this shit happens, where they all converge at once and to a single point, it gaps. I swear to God, dude, it's fucking nuts. Like that closing candle, man. Whenever they converge on these closing or opening candles, some shit happens. But when it happens, like if it gaps like after hours, for example, it doesn't do that. Like right here, see what I mean? It's like it didn't even register. But it did gap though. And the SPY too. That's how you take one look at the markets, dude, and you know we're about to come out of this hole. I mean, throughout history, right? You can literally see all of the major crises, but just by looking at the moving averages. Like, look, I'll turn the candles to bars, right? I'll take these lines off for a second. Oh, I had that prediction. I probably shouldn't have done that. I was pretty spot on, bro. We'll see. It's getting close. I don't know. It's getting close. I'm going to leave that there. Alright, but anyways, you see the bear lines on the bottom because they're being trampled on by the bulls. They're uptrend. It never even, on the weekly, the SPY never even crossed, I think, but a few times during 2009 and the dot-com bubble. That's it. Other than that, I mean, there's not much downside to this bitch. It just seems like it because of psychology. But, you know, from here to here, 2001 to 2004, yeah, that's a big crisis going on. From here to here, that's 2008 to 2008 recovery. And then boom, no issues until when? Fucking COVID. That's the monetary policy. Fed steps in, liquidity facilities, all that shit happens right here. And then look. But even then, it doesn't cross. The only time they ever crossed was here. And here. 2000 dot-com bubble in 2008. But here, bro, we're not even fucking close, dude. We're not even close. That's why we're not done yet. We're going to see one more leg up. Big dead cat bounce. Then we're going to see some shit. Then they're going to correct. Because again, it happens. It happens. And it's going to happen here, but not yet. There's too much short interest. Not yet. Burry was early again. Just like before. I mean, and you see, I mean, COVID was, I think, the only one, since 2008, where we had something going on where the price actually touched the MAs on the bear side. But then we go to the daily, and look, we literally just tested. I mean, the critical level. I mean, if this shit holds above these two MAs here, the price, that confirms your trend reversal. I mean, you can see it. Like, you can tell when COVID is just by looking at where does the top MA dip down underneath the bear side MAs right here, to that in COVID. LIBOR to SOFR. LIBOR to SOFR. All this. This right here. Not exactly sure. I think this also is LIBOR to SOFR. 2008. Recovery past 2010. This is when they raised the debt ceiling. This is when Jerome Powell raised the debt ceiling right here. This is 2010. This is almost. This one is 2008, and it's the biggest one we had other than the .com. Most amount of time you've seen these two lines below. These two was 2008. Well, actually, no. Okay, it was the .com. But ever since then, man, I mean, it hasn't been too bad. The next worst one since then, since 2008, where we've been in it the longest, was now. COVID was very brief. Fed stepped in to save the day. This shit right here is when repo took over. And you can see the market start to like trail off a little bit when it does. Right. Gary Gensler stepped into office right here, about right there over the weekend. And then that was already, the repo's already starting to climb because SLR ended there. The yellow line, that's when SLR ended. This is when Gary stepped in to be the face of bullshit and not do a goddamn thing. That's Gary. And then, the rates were lowered. They were low at this point. And then we saw our first little tiny rate hike of 0.05, like right there in July of that year, right around Bastille Day, when everyone lost a bunch of fucking money, myself included, right here. That's when the repo and the rates started to go up. It was, albeit very, very slightly, like 0.05. But what did you see happen to the repo? Remember, it fucking skyrocketed at that time because all of a sudden you're making money on money. Interest is going up. So, and essentially the repo is them operationally shorting the entire fucking market, bonds, and everything else for liquidity and price discovery within the repo themselves. And they're going to have to, that's going to come with consequences, which is going to be the dead cat bounce that they're going to finance off of the free RHO that they're going to make from the options. Because if you look, RHO for, let's just go to, and it's funny because they're going to write leaps too here in a few weeks. Let's go to the 24th of December for the call side RHO. I mean, look at that shit, bro. If you buy this one here is the best one. 5 points on the RHO. That is fucking insane. And then they're going to turn around and they're going to fucking buy up all those puts that are on a cheap discount because the opposite is true. And then they're going to make a killing. Because, I mean, no one's paid attention to Roe for like the last 15 fucking years. They're all too worried about Roe v. Wade instead of Roe. But anyways, I got to go for a minute. I'll be back. I've probably been on here way too long anyway.